Hey guys, what's up? Welcome to the MentorFX private mentorship. This is webinar 159, I believe, and I'm just going to jump right into it. So as always, welcome to any new members. You guys are always welcome. And actually, as a lot of you might have seen, I made a very quick post, a very quick update for everyone right here, where basically my biggest focus over basically the last few months, and most importantly over the last week, and especially this upcoming week, is to release a very powerful kind of, not just a starting point, but also like a completion point for a lot of people that are new here, or coming here, or have been here for a while, to give you kind of a full rebrand of the way that we think about the markets and why the things that we do work the way they do, how we use the tools, how we use the concepts, basically everything along that. I already have, actually, maybe I can show you this. Yeah, I'll just show it. It's fine. I don't care. I already have a number of them completed. So this is kind of going through the step by step, and it's going to be, I'm going to make it into a member section, like on a website, so you guys can all access it, and it's all in one spot, because I know that the mentorship itself, the Discord specifically, has things all over the place. However, I do still find that a lot of the stuff that does exist can be extremely helpful for some people, especially from the psychological side, right? Because as a lot of you might know, psychology probably ends up being one of the most important things for everyone. And oftentimes, funny enough, the people that continue to get funded, the people that continue to pull insane performance out of the market, the people that end up getting to the point that a lot of us look up to, you know, the points that I looked up to before, the point that a lot of you might look up to now, all of those people say the same thing. And it's, I decided to bite the bullet. I decided to trust what Anton said and what the members said. I decided just to go through it, even though I know some of it is outdated in regards to the specific conceptual usage. And all of a sudden, they come out of it on the other side as someone that fully understands what is necessary of them, of how to do it, of the psychology that they can use to aid them in doing it. So it seems to be the same story over and over, right? Which is why, you know, the archive of what exists will always exist. But I am putting together this absolutely, well, it's just very powerful. So please just keep your eyes out this week. I will make sure to post some stuff this week for everyone, and it will be available. So you'll be able to start laying a proper foundation, especially if you're brand new. And again, if you have friends that, you know, kind of have seen what's inside of here and they're scared because of how it looks, this is something that you can tell them, because it's about to become a lot more quote unquote simplified, and it'll give you a starting point to start kind of processing what we're doing. And then as you show up to these, of course, it becomes even easier. How many parts do you think it'll be? I don't know yet. A few? 3, 4, 5? We'll see. But you know, this is everything that was generally kind of worked through. There's more to it, but at the moment, this is just kind of the starting point, and then we'll get into this later. But we're not gonna let's not get too crazy about that right now. I'm just gonna get this stuff released to you guys. But I just want you to know that that's what we've been working on, and that's what's going to be made available, which I think is really cool. And yeah, so that's that. Now, follow up, right? So again, welcome to all the new members, and welcome to all the existing members. It's always a pleasure to see all of you. You guys are always free to ask anything, kind of share what was going on for you during the week, whatever you might have seen, whatever you might have traded. Always open to questions and whatever, right? But if there are not too many questions, then I can jump right into some of the stuff that I wanted to discuss for this week, based on just what kind of occurred. What's up, Kevin? Max brightness. Sarah, so stoked to go through the material. Cool, man. Yeah, Chris, how many parts do you think there will be? Not 100% sure. Probably around 4 or 5. So we'll start with John here. He said, can you explain why coffee entered a quote-unquote ugly accumulation on the one-day chart back in February of 2023? In February 2023. So around here, whoops. January, February of 2020. I don't know, did I say it entered something ugly at this point? Is that what I said? So February of 2023. Here we go. Okay, I mean, I don't know exactly what the context back here was. We can take a quick look. Again, the indicator might not always line up, but at the time of looking back here, you have price under a 200 EMA on the daily, significantly under a 200 EMA. You have price coming off of a potential accumulation, but down in the depths of hell. And this is its first kind of big move up out of there. The weekly at that point was under basically all MAs, hasn't even made its way out of the overall building MB here, or any other MB for that matter, of course, but most importantly, the fact that it hasn't even proven any bit of bullishness just yet, so it's in a big base. It might start a move, but nothing telling us that just yet. You know, if we went to even a monthly, this is just stuck. There would be no reason to even continue looking at this. So, you know, before I'd even jump lower, you know, we're just under the 200, a downward sloping 200. This is the first time we've moved above. So we've undergone some kind of MB creation or accumulation creation, and we've come out of stage one. If we did come out of the stage one, it came out from here. So the stage two is extended. So the reason coming into February, as per the question, why is it an ugly accumulation? Because it doesn't meet anything for a trend that I would personally want to trade. So that's just like the easy answer there. Right. Now, if this move here was happening here, that would have been a very different story in terms of context. But here, it just feels like after the move has lost its initial momentum, you're now hoping to find where the next legs are going to come from, rather than letting the next leg prove that money's in there and then that it wants to go. Because the likelihood is that if this wants to make a move, it's going to have to build that move out. Because moves don't just randomly come from a downward sloping 200 that just go like this. On average, based on the stuff that I've seen, right? I said ugly distribution into ugly accumulation. Yeah, I mean that's the reason that just again I don't remember, but just based on February, that's why I don't see any context there that's worth trading at that moment. And yeah, you can see this is exactly what kind of happens. Price maybe starts something and then collapses back down, same exact thing. And then again, if you came to me and you said I'm trying to trade in here, I would have said the exact same thing, because again, this trading here or trying to figure out what's going on here is almost equivalent to trying to trade to try to trade right here, right? It's pretty much the same kind of price action in those two areas. So I would have ignored, and then as price started moving out, accumulation became very clear, and then we can start following that up, and that's exactly why I've been trying to follow this thing inside of this until it got a little bit more choppy now, and then the weekly's probably building something up. So yeah, it might be making a move soon. Like, we've been watching this coffee for a bit, but coffee trade's a very weird time zone. So I haven't looked at it much after, like, I can't figure out what time it's on. Shellings, you're good, bro. It's all good. Gonna go back up here, see what's up. This week I will finish all videos and pictures, etc. that we have in the Discord. Took me a lot of time, but it is the best time that I spent. Oh, so there you go, right? So if all this, I know Valdis has been here a while, but kind of same thing right there. And I know King Nasty, who's doing very well for himself, you know, kind of said the exact same thing. He's been through everything. Now, his system might not be the exact replica of what I'm doing specifically, but he's seen it all. And Evaldis has done the same thing. So it's a beautiful thing. Frank says, I bought this stock because CBA sold their 5% stake a few weeks ago and bought it. So before I even read that, I don't care what the reasoning is. If you bought it for a reasoning, I hate the purchase, right? If you bought it because of a context or a market setup, then I like it. Let's see what you said. Also, end of the financial year report comes out soon. Thoughts? So my thoughts instantly before I even open the chart is, if you're buying it based on a fundamental reason, like someone sold a 5% stake or whatever, then you're doing it wrong, right? You should be an investor. You shouldn't be trading, right? And I assume that if I open this, you'll probably have a stop in. Okay, yeah. So again, like this is classic. I'm trying to be an investor, but I actually am trading. So forget the news. Right now, personally looking at this, I don't like the trade that much. It might work. You might get that pop up into the 20 at minimum, and then it might roll back over and keep going. So you might have just sniped maybe a 1-to-1 out of that. Oftentimes, I don't like entering into markets like this. This isn't clear distribution. This is kind of, it started this nice accumulation, but then it started to fail it. Entered that clear distribution, is now just holding it down. This looks like a knife catch to me. Even at first glance, before I even look at anything else, this looks like a pure knife catch. Even at minimum, if you weren't trying to knife catch, well, actually, the only thing that would work here is a knife catch, because when a market becomes extended like this, because this is stage 1 into stage 2, stage 1 into stage 2, stage 1 into stage 2, so multi-stage 1, stage 2 into an extension beyond the downslipping MAs, this is the only time a knife catch might work, and it oftentimes works for about a bounce to the 10 or the 20. That's oftentimes what happens. So this is probably going to bounce up to around whatever that price is. This is probably going to bounce up to around, oh, I don't see the price, up to around this area here, at which point either it's going to build a longer term base and then actually start to move, and that's where I would be getting involved if I'm even considering this thing, or it's just going to roll over. And then if you're not managed, you're going to be taking a loss. So I don't personally like this. And even more so, the fact that this is taken based on a fundamental reason, not on a chart reason, makes it even worse, in my opinion, right? So again, these are my opinions, as you all know. So if this is something that's profitable for you and you've been trading this way and you make money, then by all means continue. But this is not at all how I think, right? So if you look at my list here, these are some of the stuff, the things that I'm currently in, right? So I'm currently in, actually I was in Netflix. I actually took a break even on this. I'll go over this today. I'm in UTHR, okay, this stock right here, and I'm in Google at the moment. So I'm in all of those. Now, before I go any further, and a lot of the members that have been here for a while, and maybe even some of the beginners that have been here for just a few webinars will be able to tell me, if I look at this and I say, hey guys, do you think I know what this company is, what this company does, what this company's financials are, what the last report of a news that this company released? Do I know the name of the CEO? Listen, for all I care, okay, the CEO of this company, okay, could be a convicted murderer that has killed 15 families and the worst guy in the world, and I wouldn't know, right? I would have no idea, and it would not affect my ability to trade it, right? Because the reality is I don't give a shit, right? The only reason I know what this is because I read this thing that says United Therapeutics Corporation. I don't know what they therapize in. I don't know what medicine they do. I have no idea, right? All I know, Frank, so this is specifically aimed for Frank. All I know is that when I opened the Mentafx screener, right, because again, I want to simplify my own process, and I looked at things that are bullish, one of the things that showed up as extremely bullish a few weeks ago, and now still to this week, is UTHR, right? It showed up as bullish across multiple models, across multiple timeframes. So all I did personally was I went to the stock when it was around here, and I said, okay, is this within a market condition that I would want to trade it, right? It was coming out of that weekly. It was up here, validating a lot of demand, moving long. The daily was, of course, very clear. It showed overall strength against the market, showed overall bullishness. Overall MBs were being validated, and demand zones were being validated and held, right? So again, this comes from the currently existing remastered content, but also will be in the mastery content, okay? Like demand zones that were created, right? So this creates a demand zone, are validated and never get traded back to. So there's big money interest behind this that's moving this price higher. And likely, if we can do it again, it will do it again. And guess what? That's exactly what happens, right? And all I did was I executed my actual trading system through the longs, and I just simply executed basically on, either this MB, this double MB, however you want to call it, and I just entered through that. Now, that's what it came from. And guess what? As I did that, I have no clue whatsoever what this stock actually is, or what they're actually doing, or how well they're going to do in the future. All I know is that I want to get into something that has been proving to move, and as a result, I'm going to be behind it, right? Now, Now, someone said something important that I did want to talk about. Oh yeah, okay. So it actually goes hand in hand with a few things that were asked, right? Where you're kind of looking for a trade here. This is something that I wanted to discuss today with the team, because it just so happened that recently I had a member reach out to me. It actually happened a second ago, before this webinar, but it happened over the week in terms of why I'm talking about this. So a member reached out to me and he basically, showed me that he's made some improvements in his overall system. And he's now starting to find a little bit more profitability with that system as like at the moment of what he's seeing. And one of the things that he did, just one of the things he did, was he noticed that the better markets that he's trading, the ones that are giving him better opportunities, are ones that are more synchronized across timeframes in terms of models. So the ones that are more, quote unquote, green across the board, or the ones that synchronize more, are the ones that tend to make a better move. And I kind of messaged him back and I said, funny enough, of course, this is what I know. This is what I've noticed. This is what I personally use to literally position myself in moves. But funny enough, I had a talk as well with one of our members who's performing insanely well. And he has some, he's doing crazy for himself. And his system is a 1 minute / 5 minute entry, okay? And he starts his entire analysis every single time around like the monthly or the weekly. And he will do that. And all he will do is he will make sure that he's in just basically stage 2s nonstop. So basically price is already proving to deliver. It's already moving. So like he wouldn't even, so if he looked at something like oil right now, even though oil might be green or whatever across the board, right? So this is kind of the discussion I had with him over the week. He would look at this and he would just ignore it completely. Okay, there's a few lessons to take out of this, but he would look at this and ignore it completely until basically price did something like this in his mind. He would not even look at it on a lower time frame, because what he wants is not only synchronization, but he wants alignment on behalf of stage 2 bullishness across all the time frames before he steps down to his entry, right? So he'll wait for the monthly to do this before he even considers going lower. So he wouldn't even touch this market at this moment, right? He might have touched it back in here, and those are the markets he's interested in. And then I asked him about UTHR because I'm in it. He said he would trade this, and he would have traded it around and after this candle would be created. And while that's happening, after this weekly, he'd be starting to watch it, because now stage 2 is starting, and he would go through it all the way down to the 1 minute to actually execute trades within it, right? So again, an example of synchronization almost taken to its final conclusion, right? Where he wants everything to be aligned, and then he'll literally scalp that entry that will end up making a big move. Now, what's really cool, and what I loved about this discussion and what I wanted to bring to all of you today, is that if you just model some of what he just did and take it into account for your own system, you can save yourself a shit ton of money in the live environment. And the reason that I say that is because, quite literally, what is true about trading a lower time frame system, or actually any system, any day that you show up? If I gave you a market and a system with an entry criteria, what's going to happen no matter what time frame you're trading, for the most part, if you go to that market on any given day, live? Because of the way it is, yes, exactly. Because of the way trading works in terms of patterns, there's actually going to be infinite entries, right? There's going to be an entry that you can take. Now, the entry is not going to be good, and there might not be good context for it, and it shouldn't be an entry that you should be taking, but there is going to be an entry. So what's cool and what we can model from the member that I spoke to is that literally, this is so good to take in. So please, listen here. He'll start on his monthly / weekly. Okay, when he looks at this, he'll start going lower. But when you tell him to look at something like US oil or anything else, and he goes to it, the second he sees this and he knows prices in here, he doesn't even consider looking further. He will not step down inside to see if there might be a change of character or a move that's worth it. He will not step down for any reason, because the stage 2 that he's looking for, or the delivery of some kind of stage 2 on the timeframes that he's looking for, is not happening. So if it's not happening on the monthly, he'll walk away. So simply, that member will not touch oil probably for the next 2 months, and he won't even go to a lower time frame to see it. This is so powerful, because it goes hand in hand with the thing that we see every single week. and that we see everyone make huge mistakes with, where you do the back testing, you know your system works, the system is great, if you trade that system, you're gonna make money, but then you get live, and you look at a market, and you go, yeah, okay, this really isn't that clear, it's not that clear, but maybe it's an accumulation, or maybe it's a distribution, maybe, I'll go take a look, maybe, maybe a zone, maybe it's it could be a distribution, I'll just see what a 15-minute is saying. There's kind of a break here, and theoretically, this could be an ICI. Okay, hold on. Okay. On this day, I definitely would have taken this ICI. It looks so good. It looks so good. Oh my God, I'm making money. Oh, I lost. What the heck? Why am I always losing? Ment. Listen, Ment, I'm doing so well in my back testing, but my live is killing me. Well, you made the mistake when you thought, hey, let me just take a look. Let me just take a little look-see. The reality is I want you to model the behavior from one of the members that literally goes to oil, and as I ask him, hey, take a look at oil, what do you think? And he goes, nope, I need it to be up here. If it doesn't reach 88 at least in a month, I don't want to touch this. So he won't even go, but maybe, fuck, but maybe. That won't happen in his entire trading. It will not happen. He will not do it in any way, right? And then I asked him to look at something else that I've traded. I asked him to look at Google, and he clicked on it, and he said, yep, I would have been watching Google, easily buy here or here, guaranteed. And then he would go lower, and he did that. And he said, okay, on the weekly, yep, looks good. On the daily, right? He didn't like this, and then he said around here it might have looked good, and then if he went lower, he would have looked to take an entry on it. Okay, phenomenal. The point being is that this member, and the lesson I want you to take from this, and I want you to write this down, is that as you go through your synchronization, as you maybe go through your models, as you go through the overall EVC bubble, or a little bit higher, and something is not in line with what you're normally used to seeing through your images, through your testing, through your back testing, there is not a reason to step down lower. There's not a reason to go see how that new red news event affected the price. There's no reason to go see how that new 5-minute range is being built by a big move. There's zero reason to it, because it's already proven to you that it's in that state where there's not a reason for you to do anything. And the fact that you then force something is exactly why a lot of you, despite having profitable systems, just really hear that. Despite a lot of you right now, right here, having profitable systems, you still force yourself to keep yourself unprofitable, which is wild, right? That is a wild thing to do. EVC stands for entry validation context. It's just timeframes. Okay? So, and again, this is not an attack on anyone. Well, kind of it is, right? It's not an attack on anyone independently, but it's an attack on the thought process that a lot of people use. And I want to make sure that none of you use that thought process again, right? Now, what's funny is as you look at my list here, this is some of the list of the stuff that I've been trading or been watching, okay? What's funny is if I go to a weekly chart here, take a look as I just go through these at what the market looks like, and it's on my list. So remember, it's on my list, and this is what the market looks like, okay? Here's QQQ. This is NASDAQ, basically. Here's ARM. Look where it is. Here's Reddit. Look where it is. Here's SE. Okay, that's a little bit shittier. Honestly, ignore it. Here's SN. Look where it is. Here's TJX. Look where it is. Look where it is. I'll go quicker. Look. Look where these are. Look at the trades I'm in. That's a trade I'm in. Look where it is. That's a trade I took a break even, but that's a trade I wasn't. Here's a trade I wasn't. Look where it is. Here's a trade I'm in. This is a trade I'm in. Look where it is. Here's a trade I'm in. Look where it is. Here's a trade I was watching. Look where it is. Here's something I had an eye on. Look where it is when I have it on my eyes. Here's something I'm looking. Look at where it is. Here's something that I'm ready to maybe take a trade on. Look where it is. Here's something that I'm watching. Look where it is. Look where it is. Okay? As I do this, a very simple bell should be going off in your mind. A bell should be going off. Right? UJ, hey, look where it is, right? UJ's been something that is one of the only pairs we've been watching, okay? One of the only pairs. And that these same entries we discussed for a few weeks now, right, are delivering in beautiful ways. I think the initial time we spoke about the longs on this was through this overall MB. And I said, you know, this, if you really wanted to, was the MB that you would take. And beyond this are opportunities, right? The simple person using the simplest MB buy stop to trade a 1 to 3 system just made how much on a 5 mil or a $2 million account? Just made whatever that is, 20K, 40K, 60K. Done, right? I feel like FX pairs rarely surf like this on the weekly timeframes. UJ is a rare exception because it's not about the pairs, my man. There are 100 FX pairs and all of them are very closely correlated, basically. And there are 10,000 stocks. So which ones on average, if I just looked at averages, are going to show up more often? Stocks, because there's 10,000 different ones. So yes, when you have 100 FX pairs, 200 FX pairs, and they're all generally correlated, there's only going to be a handful, if any, that are within a context worth trading. But the problem with the space is that, hey, people learn through a lot of mentors and all this stuff out there that Forex is the only way to make good money, and they start to force things on markets that are complete shit, and guess what? They never get anywhere. Look at EU 1 to 2 years ago. The context was clean. Yep, it was. That's what the context we were trading, right? I was trading this whole way down, guys. Now, I wasn't as good. I was still looking for bullishness because I was a little bit of I was like a little dumb guy back in the day. Like I used to look for this for bullish. I wasn't taking into account the distribution here. This is what I took. Yeah, I got a 200R or like 100R, something crazy. Yeah, big runner, but on a very low time frame. But this was a market that was a clean condition. And then it entered this. And now people are sitting there going, Ment, what do you think about EU? Is it ready? Come on, can we get a trade? Like, I want to trade EU. It's the best pair in the world. I learned that from the mentors online. But the thing is, like, look at it, right? Well, maybe it's cleaner on a like, what's our screener sign? Honestly, like, it doesn't know what it wants to do. This thing is bearish and bullish and bearish, but bullish, and it just doesn't know where it wants to go, and it's above a 200, under 200, below. Now it's below everything. Then the higher time frame is actually like still bearish. So actually the bearish looks pretty good, but it's starting a bearish move. The monthly's kind of stuck here. If anything, it's bearish, right? But then the bearishness is a little bit wonky, I would say. Well, actually, it's setting up right now for a potential move. It can make a lower move, but now it's an accumulation here. So again, that's really weird because if this was in distribution, then I would consider the trades. But again, it's even more confusing, right? There's nothing here. So this is why I've always hated a lot of the space for like forcing you to be like, guys, EU, you got to be the trader. You got to be an EU trader because it's the best thing, and you got to know every day what it's going to do, and it's just the most wildest thing in the world. But in reality, it's not how markets operate, or at least that's not how trends operate, right? There are theoretically ways that you can make that work for you if you really want to. But I've done that version of education. I've tried to trade that way, and I've traded that way. And I made a little bit of money trading that way. But I've been there, right? So you can go back to the things that I've maybe done before and do it on a level there. But I'm doing the thing that makes the most sense and makes me the most money, right? And this has made me more money than any of those things put together. Like I, on average, probably like could make just as much money doing like basic support resistance as I could with a lot of the stuff you now see on the SMC space, right? Because in reality, it's similar in its approach, is the way I think about it. Or you can learn about how trends work. And once you learn how trends work, it's over. In my opinion, it's over. Like once you truly understand how a trend functions and why trends work, and this is actually one of the biggest things I'm covering and will be available to all of you this week, this initial starting point that I just recorded and have everything ready for you guys. It's going to be the true explanation and understanding of why trends work. So you don't sit there going, but can this move? But should it move? Like, why is it making that move? Why is it that demand validation isn't coming back to anything? You're going to literally understand why trends, okay, deliver the way they do in a huge, huge way. And it's just a starting point of it, but it's going to be very powerful. But yeah, as you guys saw, as I went through these examples right here, right, whether I do them on the weekly or daily, and I can do it again, right, on the daily, and take a look at some of the stuff on the list. Right? Everything shows, like, it's almost insane if you think about, like, if you just look through the things I'm looking at, with the exception of this one, literally, right? This is the only one that's like the odd one out. So honestly, the easiest thing to do is maybe just get rid of it. There you go, done, right, taken care of. Even though it's probably bullish and it probably will deliver, there you go, done. Nothing more to think of, right? Because the reality is if the stuff that's working well for me, right, is proving to look like, right, like the stuff you just saw, then anything that doesn't look along those lines, aka screenshots of the things that work, if they don't look like them or something like them, what's the best thing to do? It's to ignore them, right? And also for John, you know, like there's other pairs, like there's UJ, you know, there's CHF JPY, GBP JPY, but the reality is they're all like the same thing. So I just look at one of them, and then if it wants to set up, I'll take it, right? On this one. Condition, good context. Yeah, and this will happen, right? And remember, I think I remember talking about this. The only reason the condition looked okay was because you got one lucky runner. So this is the idea of actually, if I go up, so again, not to bash you, Frank, but we have a great example here. Just to go up, the example here is perfect because this is an example of where he's in a bad condition, but it may be the case that it just takes off and he might get that, right? And he might get that move and there he made some money on, let's say, a bad condition. But the reality is if that doesn't happen, then the likelihood is that it'll end up around here, right? By the time that he's then trading a good context, maybe, you know, he takes a few losses, maybe it plays around, maybe it even builds a bigger base, comes down, whatever, plays around, then takes off, then comes back, and then boom, it starts building those moves. And then he starts trading in, you know, these areas, these areas, these areas, these areas. All of a sudden, right, he goes on a rampage, right? Which is great because you want to be there for those moves. But if you don't understand the difference between what created those conditions or those moves, all of a sudden, you will also be trading other pairs that also meet this condition, which means that even though you might be doing very well on one pair because you finally got lucky about the context, the other ones that you're trading will now bring down that performance further, bring it down further, bring it down further, and all of a sudden, you're still a break-even trader. This is how break-even traders are formed. A lot of the time, a break-even trader, there are some things that they can improve, but a lot of the time, a break-even trader actually just has an issue with understanding what contexts create valuable moves by which they can make money in. That's all that's happening, right? So just keep that in mind because, again, context, context, context. If you don't understand the context, or if you force the context, or if you go lower to start entering, despite a context being not so clear, all of a sudden you're led to this kind of, you're pushed to the break-even edge. You're pushed to the take losses and don't understand why you're taking losses despite the fact that you shouldn't have even been taking trades in the first place. You get pushed to the, hey, I've been backtesting, I'm so profitable, what's going on live? This is exactly where that comes from. This is exactly like where that thing comes from, right? So, yes. And I actually wanted to build upon that because I had some other things I wanted to discuss specifically. Actually, I'll build off that later. Let me go through some more questions and then we can work from there, okay? You can see this is from the little thing I'm building for you guys. But yeah, I mean, as you look through these, like there's a very clear thing being shown. And the reality is anyone that's like, I would say an only FX trader on, let's say, a little bit of a higher time frame, the reality is the only eyes they should have had on is like probably XXX JPY pairs with some notable exceptions if there were any, because I haven't looked, but there might be some notable exceptions there, right? But notice, funny enough, how the only thing that we have, as the team have watched as an FX pair for the longest time ever, since here, the main things have been XXX JPY pairs. And since that point, as the only pairs we've been watching to get involved in and follow, this is the move that comes from it. And you know, the question then becomes, do you think you could make money based on a system that you'd be building out here in a move like this, maybe starting from here if you followed some rules, even some simpler ones? And if the answer becomes yes, then the focus now should become, let me figure out when these moments occur and then follow these moments rather than forcing, let's say, you know, like something on this. Because the reality is most people following this thing, unless they're on a sub like seconds, minute time frame, and you guys, I mean, you can go back on your own journals and tell me this is true even, right? Are likely experiencing a lot of, let's say, randomness. There's the random wins, there's random strings of losses, probably not even break-evens, but if there are break-evens, then great. But they're likely stuck at a general plateau. Back to the example that we had sent by our good man, right? They're stuck at a potential plateau right here, where they're just trading the context, right? And they're constantly wondering, what am I doing wrong? Rather than, why is this market something that I'm considering, right? Did I just decide that I like it now, or what's going on there? So Onion says, I have got to the point where even though I feel like I'm making quite a few mistakes, I still came out of June only down due to commissions. The progress I'm making is astounding, and that's huge. That's absolutely huge. And I think some of the stuff I just discussed might help you a lot. Doc says, excited for the new material as I feel I'm in no man's land. Exactly. That is why I'm making it. I know that a lot of people that start showing up, even though it's helpful and they will get it, it's a lot. And I want to give you something that you can actually work through right now, because I think it's very important. Because again, like my goal is to have you learn and understand a lot of things quite quickly so you can start putting it into practice, so you can start using the tools, so you want to stay on for the team, the people, the concepts, the education, and the tools, right? That's literally the goal. So I think it's very important that you're given something that you can tangibly understand out of the gate, and then have the option, if you want to go through, let's say the archive of all the psychology. Because I'm sure, even though, Doc, you might feel like you're in no man's land, I'm going to assume that in the chance that you've worked with that 1 to 45 and 100 plus, you've already picked up, I think, on probably a lot of helpful psychological tips, psychological things, issues you've probably seen from members firsthand, even if the conceptual might not make too much sense right now, right? You said you're trying to take the next step and build a strategy that works. Nice. Advance. Oh, thanks in advance for all the work that you have done. Thank you, man. I appreciate you a lot. Thank you. Can you look at Nikkei? I think it has a beautiful setup on the 5-minute if the market doesn't go crazy when it opens. Opens are always crazy, right? But sure. I think we actually added it as well. JPY 225, something like that, right? Okay, I'll look at it in a second. I think we added a bunch of stuff to this as well. I'm just going to check. I'm not sure. I think we did. I swear I added it. Oh, it did. JPN 225, yeah? This is it. And I think we have cryptos now as well, like crazy cryptos. How do I just look up cryptos? I forget. There we go. Okay, we don't have crazy cryptos yet. We just have the easy cryptos. But we're adding a few crazy cryptos for everyone as well. Okay, so JPN, right? 225. Yeah, I mean, easy, very easy context reading, so you can, of course, take a look at it. Oh, we'll take a look at this, right? So it's kind of along the lines of what we discussed, right? That move did come down, and then I said we'd want to see it build some kind of base and then start a move. So it started that base, started that move through it. Let's actually spiff this up now. But yeah, it's actually, contextually, it's already, I can already tell it's probably going to be a kind of a good one, right? Weekly kind of sideways stage 1, starting that stage 2, which is perfect. As you get to the daily, you had a little bit of chop here, which was a little bit annoying, but you finally came out of whatever this was, out of the MBs and whatnot. And honestly, like, your first opportunities should have been somewhere probably inside of here, right? Especially on a lower time frame. So like, I'd be looking at my 60-minute chart definitely in here, but we can take a look beyond that, right? Beyond that for sure. Yeah, I would definitely be watching, like, this looks exactly like NASDAQ, but better almost, because NASDAQ right now, instead of making this move, it came down a bit, if you guys saw and remember that. But yeah, some initial moves definitely came out of this. And again, on lower timeframes, you're talking about entries through the stage 1s, either up in here, pause in here, and here. And now, I mean, you had, this is like one of those options where you had 1, 2, 3, 4 potential areas. Now price is coming down. I'd probably either let it reset up something here or actually break back down and then reset up here again through something like this. Because, this is failing to run now. So that's like an important element of this. Yeah, it's not my kind of entry. It definitely came up out of this, kind of paused. Maybe if you took something here and then broke even, it's okay, but it's end of day, so I would not have touched it. Yeah, I don't see anything right now on this, personally. The entries were probably, like, if you were to study the entries were somewhere in here. In my opinion, those were definitely the entries. So like 5-minute, 30-minute, 30 minutes like the validation, right? 30, I think. Yeah, possibly something inside of these guys. Honestly, it could be okay. If start of the week maybe, actually, yeah, I mean, again, like I want to down here. I hate start of weeks. I don't like just trading into just an open. But yeah, there could be bullshit on this for sure. If anything, I'd probably say, you know, something like this. Okay, so I'd literally probably let this thing, like, again, kind of play around a little bit. It'll probably pause like so, and then you'll get like a little move up, pause, and then there will be like an opportunity here. And then if not there, then a little bit higher, it'll build something like sloppy here, and then there'll be a nice move. This is usually what prices will do if they want to make a move, okay? So I don't see anything here. I don't like this at all, but that's what I would look for. Hey man, I'm 10 minutes late. All good, my man, all good. But yeah, this looks like it's starting a move. It looks good. It looks solid. No, a lot of chop here, but that's okay because now it's coming out of the chop. Clean accumulations right at the MB, so highly likely to break that and confirm reaccumulation and then reach up. Yeah. Thoughts on coffee this week, 1 hour and below? It's getting a little choppy, honestly. We delete all the stuff on there. Yeah, I mean, this could make a move. Weird reaccumulation, very, very choppy reaccumulation. I'd probably ignore it because of that. I wouldn't even go lower, I'm assuming. Yeah, I would not go lower. Even I would not go below the hourly. I don't like how choppy it got. This is just very ugly. It's very ugly in my opinion. Seems very loose. I think you're gonna get like maybe another pullback for a week. I would ignore it for now. Not my kind of trade. But if you got a rules meeting here, then by all means. But right now it's in distribution. I wouldn't even touch it. Like even on an hourly, it's in redistribution. Give it a second to become accumulation minimum before you look at a much lower time frame. Yeah, I mean it's not good. I don't like it. It wants to go long, but it doesn't look like it wants to go long. I think you're gonna get another week of chop. Probably. This is super loose. I have no idea like where it wants to stop. I would prefer this actually flushes like that and then comes up, pauses, builds it, and I'll be looking to enter if I'm watching this thing around there. I'm not looking at this beyond that. Michael says, how do you backtest correctly? Is it better to rewind to a random moment in time and now search for my criteria and entry? Or do I have to rewind on trading view to moment before good up moves and now look for opportunities? Actually, a version of both, but neither. You don't even want to rewind, especially if you haven't tested that system yet, right? You just want to go find good opportunities. That's your number one, and take photos of them. That's literally it. Find a good market and good opportunities within that market, not rewind. The rewind's not going to do anything for you. The rewind matters when you have a system. Prior to a system, rewinding does nothing except for what I like to call it glorifies your ego if you're right and brings you down further, aka reconfirming that you don't know what you don't know what you're doing if you don't do well. So like it's a lose-lose situation, right? Either you get it right in your back test and you feel good, but that doesn't matter because it doesn't bring you anywhere because you have no system, or you feel bad and you reconfirm that you knew you didn't know what the fuck you're doing. So now you believe even more so that you don't know what you're doing, right? So you don't want to do either one of those because it's a lose-lose no matter what. So instead, the better choice is to go find, like with a good context. So you can just look at a screener, for instance, at some of the stuff there and go and study the markets that led to that good context or or the moves that happened to make that good context, right? And study the moves available within that move just through MBs. How did the MAs interact? Buy stopping MBs or large MBs? Yeah, you want to do that because like you don't want to rewind or replay mode if you don't have a system. It's not going to help. What's the reason for stop loss? Which one? Sapir. Sorry. You know, I like to go through it from top down, so I always miss where we are, or like. So when you ask something, make sure it's in reference to like a specific thing we were looking at, because I don't remember exactly where we were. Yeah. Every webinar, someone has to die, right? At least one person. It's for the motivation, guys. Nice choice of example. Let's go, man. We don't care about news. Yeah, we don't. Exactly. Frank said, thanks. Well, this is where the trade is now and the market is closed. Is taking off the stop and holding till it's in profit a bad idea? Well, the bad idea is trading before you have a system. That's the bad idea. There's no... Oh, okay. Well... like, I'm not laughing at you. I'm laughing at the fact that the analysis that, you know, I kind of drew out is like perfection, right? You literally did get that little bounce up into a straight up down move. Not even a bounce up. It just continued, right? As it should, because it's surfing the 10 and the 20 lower, and it's proving to be bearish, and it's stage 1 and 2 being bearish, and the likelihood is that it just wants to go, and, you know, like, this is a falling knife catch, right? Now, the best thing to do that you didn't do is not to trade until you've learned a system, right? That's number one, but that's okay. That's not done, so it's fine. The next worst thing to do is to trade live money. I hope this is not live money, but if it is, that's okay. We've done another bad thing. So it's 2 bad things, but you haven't done 3 bad things, so you're all good, okay? Another bad thing to do, okay, it was just bad. You don't want to do that, okay? This webinar is your story of where you change. This is what marks the change forever, right? From now on. Regarding actual money on the line and stuff, I do not sit there and ever make assumptions for anyone about what they should do. If I was a trader in your shoes and I took this trade and I'm in a loss, and even if it turns up and does this tomorrow, okay, I would be closing, walking away, and potentially even punishing myself with a minimum of 4 months of no touching anything live, right? Minimum. And that should be already a thing for you. Like, you shouldn't even have to do the punishment because you shouldn't be touching live anyway, right? Because I'm assuming, and just from what I see here, you don't have a system yet, right? You just bought this because someone told you about some news, or you read the news somewhere and you really thought, hey, maybe this can make a move because it's so extended and it came down really hard. Maybe I can make a move out of this. And lo and behold, the normal thing happens. You know, trends deliver trends. The news doesn't matter. The news led to the people that bought to get liquidated, right? So, yeah, like in your shoes, right? If I lived in your house and you paid me to live in your house to teach you every single day, and I came into the room and I saw this, you'd be like a gremlin. You're like, I took a trade. I'd be like, what the fuck? I'd shut it all down. I'd be like, get this out of here, throw your shit away, right? And I'd make you like draw things in a book for a month until you literally were terrified to ever take another trade before you knew what you're doing, right? You'd be like, I don't want to go back to drawing butterflies in a little notebook. I just want to learn how to trade, please. Good, let's do it, right? So, I mean, it's almost like perfect because, you know, this is like the perfect synergy of I took a random trade, the random trade led to a random action, right? As it should. And now we can focus on not doing that. But again, I don't want to sit here and be like, you should close it, you should open it, you should hold it. That's not my place ever. It's never going to be my place. But the reality is, if you trade like this going forward, you will lose all your money, right? That's what you need to know. Because trades like this can work, right? Like I've seen it happen before where I'm like, you should fucking close it because you're being dumb. And the next day it gaps like this. And I'm like, oh, I could have made so much money. It's like, right? It does not matter. Like Shaggy said, if you're here to learn to trade like Mint, I'd stop trading and spend all your time learning, right? Very well said. Can you do an outlook on oil? Yeah, I mean, honestly, the outlook was going through the things I'm looking at and then saying, hey, oil's not worth my time is really what it came down to. I think you can get away with it on a much lower time frame for sure. You can see I even wrote, I'm going to kind of ignore it now. This would be like the move maybe even a move like this, maybe that you start watching it on the lower. But you know, you came out of this really hard extension and you just started rallying up into it. You staged one. This is where I actually considered an entry and I missed it. And it did start from there. So actually, anyone positioned here is actually doing pretty well on this. You know, that's where I started considering this thing. And I'm still improving some of my own contextual rules for what I want to trade. Like, I really like what that member did where, you know, if his stuff wasn't even aligned from, you know, the weekly or a monthly, and it wasn't like really proving that it wants to move, like something like this, then he wouldn't even look lower. I really like that. I really respect it, right? Like, and I know that there are times where I could be better at waiting. I know that, right? I'm already phenomenal at waiting. I know that. I'm very patient with my setups. I'm very patient with the stuff I want to trade, but I know there's improvement. So I kind of want to, you know, like I learn from you guys as well, which is amazing. But, you know, I think that this move should have happened from the start out of this like stage one in here, right? The fact that it didn't happen leads me to believe that, you know, it might happen again, but I think this is going to continue to chop a little bit. Okay. So what I see here is, you know, you guys remember I took this thing as well right here and took a break even on it. Also, I think this was this week, right? Yeah, it was on Monday. So this is something we can actually cover today as well. Let me actually add this on just so I can cover it with you guys too, because I think it could be important to cover. Because again, break-even rules saving me infinite amounts of money, and simply knowing that a move that wants to go is going to go, and it not going gets me out with nothing lost. When a lot of people might have lost money on this, you know, just through holding it. You know, I really wanted this move to start. Like by this point, right, or even by here, you can see I was expecting it to go higher high, maybe make a higher low, and then keep going. That didn't happen. And oftentimes what happens is if the thing that I don't want to happen, if the thing that I want to happen doesn't happen, almost always, can you guys guess what the two outcomes of the market likely become? Perfect. John said it on the nose. Yep, this is, and you've heard it from me in like almost every webinar we've had. It's going to be choppy or it's going to go down. Right? That's always how it goes. So like if the thing that I want to happen because of what I'm used to and what I'm going to execute on does not occur, the market's either going to maybe make a really good reset up, and that's okay, or it's going to chop and go down. Right? That's it. So that fails, and as it fails, you can see price goes into some insane chop, maybe makes a move here, but really ugly, comes up like through extension, and then falls off at the end of the week. Now that leads me to say, it is hard. I want to almost guaranteed ignore this. Like that's almost where my brain instantly goes, right? Now, if you're someone that's much lower time frame oriented, right? If you allow the move to develop and there's an MB that gets validated, just some fractalized MB, whatever, and you will learn more about like kind of just MB validation, MB invalidation, and how you can use that to your benefit from the mastery section that I'm about to release as well. You guys know this from the course, but it would also be in the mastery for you newer members. If you can wait for something like this to occur, maybe on an hourly, maybe even like this to start coming higher, you can start looking at lower timeframes, in my opinion, potentially in here if you want to. But again, these are those moments where when I have to make a case, when I'm literally standing here, like imagine you're a lawyer, okay? And you're defending someone, okay? And you kind of know they did it, right? Like you know they probably murdered someone, and they're like, I didn't do it. And they're like, man, listen, we need to figure out a story here. Okay, this gun literally has your fingerprints on it. He's like, I have never seen it before. And he looks away, you know, into the abyss. And the lawyer's like, are you fucking kidding me? And you're looking at this guy like, what? So when you have that inkling that, you know, they probably did it, do you think that when it goes to the court, do you think he's going to be convicted, or do you think he's going to go scot-free, innocent? He's probably going to be convicted. Now, that's almost the same thing for oil right now, right? When the thing is literally like, I want to look away, but maybe it can make that move. The likelihood is the court is going to see it as bullshit, and it's going to go to jail. Okay? It's going to go to jail. So, yeah, I mean, I think this needs a flush out. All I'm saying is I think it needs a flush out. That's what I was trying to say. So basically, if it's not clean off the first looks and you got to say maybe and think too hard, walk away. I think that's a really good rule. And that rule keeps being proven to me, right? There's no part of me that was like, maybe. Well, actually on Netflix, it was a little bit maybe. But there was no part of me that for UTHR, for instance, was like maybe. It was like, I should just execute. That's all it was. It was like, this thing is an execution. That's all it is. There's nothing else for me to do, right? Google. When I was looking at this, there was like no question of it. It was like, yeah, this guy's probably innocent, right? Like it's innocent because it's proven that it wants to go. So I should just take it and let it do its thing, right? But then I look at this and a lot of parts of me are like, you know, there is like, again, I can reason with it. I can say, yes, it came through an extension. It started as stage 1 and 2, a very short-term stage 1, pushed out, make another short-term stage 1. So maybe it has a move in it. But the reality is everything is telling me this guy is guilty, right? Everything here is telling me it's probably going to go through a deeper stage 1. It probably needs to flush out. It's probably smarter to wait for a more bullish move because guess what? Are there going to be ICIs or clean MBs and buy stops in here? Yes. Is there going to be ICIs and MBs if price came down in here? Yes. If price then kept going down and chopped and chopped and chopped, would there be another clean MB and clean ICIs in here? Yes. If price instead came down and then started going up, is there going to be a clean ICI and clean setups in here? Yes. If it starts going up, maybe pauses and goes, is there going to be clean ICI setups in here? Okay, so then the question simply becomes, which one are you more willing to trade? 1, 2, 3, 4, or 5? And all of a sudden, right, almost a lot of people, some people will say 1 is okay, and that's fine. But a lot of people will then go, yeah, probably 4 and 5 because it's almost like a guarantee, right? And that's where my brain goes. So again, this is kind of the process by which you eliminate ideas, right? There may not be a reason, even though the setup might look good on a lower time frame, to take it, right? And even when I go lower here, I don't see the setup. But again, oil is something that has been on our list. The screener has spoken, right? The screener is all. The screener, you know, this was from a while back, but this is pretty good. So we can take that into account, okay? Now, something I want to talk about really quickly, guys, is start making use of this. Yeah, just do it. Like, it would be so helpful for the team overall. But I added, under mental fact strategy, is the screener readings and time. Simply, anytime you do any analysis and you have a screener or whatever it is, just post either the analysis or just the screener and the name of the market and the date. This is so powerful because in the future, 2 months from now, we can go back and look at those things. You know, I went up and I did it for a while, from a while back. But if you look at this, right, this is an image from 0509. This is 0509, okay, on gold. And then you can literally now go back and say, okay, on 0509, whatever that was, May 9th, which was here, this is where this, again, like I don't have the reading from here. Maybe I do somewhere, but this was the reading back here, right? And from there came, of course, as we all know, the move that a lot of us traded. Even I traded this one. Came this move, right? That was on 0509. If you go in, here's something really cool. Look at this. Can anyone read this? Here, I'm going to post it in the chat. There it is. That's US 100, NAS 100, NASDAQ on 0104. This is what it looked like. Right here, you can see the image, but basically this, 0104, January 4th, okay? $20.24. Here. That was that reading right there, okay? That was where this reading came from, right here. Okay? That's a powerful thing to be able to go back and see. So I ask that any time you guys do some analysis on anything, I don't really care. It's not about it being right or wrong. I ask that you just post like this timestamp, even if it's today, which is okay, because in 3 months, right, when it's 09, you can go back 3 months and say, hey, what happened when someone posted, you know, this SPGI that was extremely green during that time, right? What happened during, you know, CAD JPY? January 17th. This is when I sent the image of this. Okay, January 17th of CAD JPY. This is where it was, guys. That's where it was, that image. Right? And now the question becomes, you know, if you start understanding that the screener functions this way, or that this is basically a lineup of models, do you think that through a simpler system of even where you just buy into price, or even like, or a little bit harder, MB buy stop into price, do you think you could pull at least 1 R over this time? Right? Because that's where I want you to start with your thought process. Do you think that would be possible for some of you to pull 1 R since this screener reading to here overall, if you took losses and wins, right? And I think that's really powerful because, again, guys, remember, if you can pull 1 R consistently out of price action like this over and over again, do you know what percentage of the trading population you've already outperformed? Just wondering. I think the answer is like 76%, but yeah, basically, right? I don't know the actual statistic, but yeah, 78%, 90% exactly, right? I think that's what people don't remember. Like, if you have a reading or a context or something, and this is the market you trade, and you take, let's say, a win, a loss, a break even, a win, a loss, a loss, a win, a break even, or a loss, a break even, a win, a break even, a loss, a win, and you maybe had +2, -1, -1, +2, -1, -1, +2, break even, +2, let's just say break even, -1, +2, 2, 4, 6, 8, 10, 12, 11, 10, 9, 8, 7, whatever, 7 R. Okay, so if you even pulled more than 1 R, you already outperform everybody in the space, 80% of the people in the space. And with a simple system where you can trade something like this and maybe you make 7 R, you've outperformed an even bigger population percentage, right? Yeah, exactly. Yeah. But again, we assume that we're part of the 5% because, again, I don't even care. Like, this number doesn't bother me. If I knew this number was actually 99%, do you think I'd still be trading? I would be. Because I have no problem doing the shit to get to that 1%. I literally don't. I don't mind it. I will do it, right? I will do what it requires of me because that's all I care about. That's it. So I'm gonna just run it. But yeah, like, and I think it's really powerful because I want you guys to make use of this and start posting here because, again, months from now when we look back, it's going to be helpful for all of us. We're gonna learn so much from it. And again, the question stands the same way, right? If since this point, you think on average, right, you could return at least 1 R, then you've already theoretically paid for the screener and more in terms of what it does, right? That's the way I want you to think about it. So like if during this time when the screener is fully bullish, you simply did what we did last time. You take a long, you look at the ATR 1.066, you just triple it. 3. Okay, we triple it, we make it 3. Just to make sure we're in trades. And we take 1 to 2 every time. That's all we'll do, okay? And once we're in a trade, we don't touch it. Okay? And it's broken. Nice. Great, I broke it. Phenomenal. Well, it just doesn't work. What is that? What is happening? We're in the Twilight Zone. Like, what is this? Trading view bug? All right. No backtest, draw butterflies. Yeah, literally. You need to replay the last candle again. I'll just reopen it. It always works, right? Open, then reopen. Close and then reopen or whatever. Right, so again, like, nice. So again, like, if the system was simply, hey, the screener's showing overall bullish, we flushed out, we could start a new move, I'll put a buy stop above price, that's it. I'll triple the ATR, let's make it 3, just to make sure I don't get stopped out randomly. 1 to 2, and that's my whole system, okay? Here, how do I do this? I can just set up an order, right? Is this paper trading? How do I do it? Trading panel, paper trading, connect. Okay, perfect. right? If this was my whole system, is there a way to set this up? Trade. Ew. All right, there we go. Do you guys know how to set it up on here? Is there a way? I thought I could use this to set it up. Hit buy / sell, but it's just gonna just buy it randomly. I don't know. I thought I could do this. It's really bad. Nonetheless. Okay, screw it. Whatever. We'll just do like I don't know how much. Whatever. We'll just do like 90K. I don't really care. The point is, you know, you wait to get tapped in. Okay, simple. And then great, TP, phenomenal. And you now just wait for the trade to play out as it wants to, right? You let the trade do whatever it needs to do, and you repeat the process. If it wins, you do it again. If it loses, you sit back, right? And you do this on repeat. And this could be your whole system during that time. So it then comes down, it flushes out again. You set up another buy above price until it starts going. So you wait, you wait, you wait, you wait. Great, you get tapped in, right? Same thing. Your whole system is basically complete. This is all you're doing over and over again. You let this thing decide what it wants to do. You don't really care. Jesus, they're so annoying, man. People gotta stop making all this stuff. Nonetheless, right, like, oh wow, we made quite a bit of money. Nonetheless, okay, the point is, if we had a simple system, just through the fact that price is delivering in a given direction, and we have trend, we can already have ourselves making more money than the average trader, literally, than 80% of the average traders. Once you understand that, you are going to permanently transform the way you personally approach markets, right? Yeah, they sent me 800K. Woo, easy. Easiest money of my life. What do you know? Can you do an outlook on oil? We did that. I'm sure that's creating very large runners on the 1 to 5, waiting for them. Higher time from stage 2 is correlating with lower time frame. Yep. Not likely to take trades. Yep, there you go. That's my boy. That's my man. There will be setups, perfect looking ones on that time frame in isolation. Yep, always. Right. This is the problem people don't remember, right? There's going to be perfect setups here that make this move. There's going to be perfect setups here that make this move. There's going to be perfect setups here that make this move. There's also going to be perfect setups here that do nothing. There's going to be perfect setups here that do nothing. Because perfect setups don't mean shit without the actual market confirming the perfect setups, right? John says, is waiting for stage 2 across timeframes the same as waiting for all timeframes to surf and expand above rising MAs? Sure, kind of, yeah. The moment you realize Anton is watching your screen when you trade. Listen, I've done it too. I've been there. Challing says, lost a lot of challenges doing this exact thing. Yep. A lot of time when people start challenges, day 1, they get a trade. I mean, how do they do it? Who knows? But the reality is it's likely not in line with their rules, right? That's usually what happens. It's very unlikely that the first day you start a challenge and take a trade, that trade was actually met for the rules, is the way it works, right? Unless you're trading much lower time frame, of course. So please remember, this does not affect you if you're like 5 second, 15 second, whatever. But also, if you're trading a 5 second, 15 second, or whatever it might be, and you're not waiting for your actual setup, but you're just taking it because, hey, you know, you're on a low time frame, you're like, it's got to set up. Then again, you're making that same mistake. Love the transparency. Yeah, that's how it is, man. Damn, it's so true. This is why, even though I know I've studied everything and have done the work, I'm still not consistently profitable for this exact reason. And that's going to happen, which is why our focus is to alleviate and change that, right? And one of the best ways to do that is, 1, you show up to these. 2, you take images of your trading, right? You don't have to be here for the webinars to learn this. You can go and take pictures of the things that work, right? Like, notice, even just going through this is its own catalog of images, right? As I go through this, as I go through it, as I go through it, as I go through it for the stuff that I'm looking at, the stuff that I'm looking at, the stuff that I'm looking at, blah, 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 the stuff that I'm looking at, the stuff that I'm looking at, and then all of a sudden, you get here, that bell goes off, right? And it goes off even heavier if you've started to extrapolate and take a lot of images in, right? I made 5% in the men funding competition, UJ, just implementing MB buy stop. There you go. Right, exactly. Exactly. This is literally the one that we spoke about a few webinars ago together. This specific MB based on the hashtag system video in here. Or was it? Hashtag system. This is the video where you saw it first initially, then you saw it in the webinar, and then you saw the delivery of it come. And then you saw, based on the kind of person you are and the trader you are, based on waiting for the setups. Again, this is something that I did not take, but this did meet my rules for an entry. I didn't take it because of the chop prior, but again, this is something that would have worked. But I don't predict that. I can't predict what's going to work or what's not. I just take things based on if I'm willing to put up my risk behind it, right? Will there be a men funding broker that works well with stocks? No, I would be very careful. Just, I'm going to make the warning right now to all of you. I would be very careful with going with props that offer quote unquote stocks or CFD stocks. I'd be very careful. I'll know that the money you put in is likely to go bye-bye, is the way I want you to think about it, okay? Just keep that in mind going forward. If you want to trade stocks and you want to participate in stocks, I would recommend that you find a way to get funded using other things if you need to, get money and put it into an actual stock brokerage, okay? Problem for beginners is mostly that they think these stocks look very overextended. They can't believe it will move higher. Listen, it's the same thing for everyone that's been on UJ. You know that everyone, if you've looked online, everyone thinks this is extended. Everyone thought this was extended here. Okay? Like, you have to understand that. That's how trends work, right? People don't understand how trends function. Like, you realize, just UJ as an example. Can I get this shit out of here? SUJ is an example, right? Like, people thought UJ was likely extended here after this push. Yeah, so like, you have to recognize that about the overall market, right? About what it looks like when people are in a lower time frame. When people are looking left to find all these little areas where they're like, it's gotta go, it's gotta go. Like here, everyone thought it's extended here, right? And then, you know, we're up here now. There's people probably still, including banks, right? Whatever, still in positions along these lines. You have to recognize this. There's a lot of people in like average down positions like this. They're in this and they're waiting for price to now come somewhere around here to make money, but then it goes higher, so then now they're in it again. Now guess what? This could pay off, right? Because now if price does come down and gets here, boom, they'll make money overall. But when that doesn't happen, which once in a blue moon, true trends begin, that's how liquidations occur, right? Because a lot of banks, hedge funds, institutions, this is a version of trading that they do, is average down based trading. They do it over and over and over again with huge, huge capital, right? And eventually it comes down. I'm not here for the eventual game. I'm not here for the, I hope. I'm just here for the, I know what move is coming from this. I know what move wants to come from this. I'm going to be part of that move now. Or I'm going to take a small loss and walk away. That's what I'm interested in, right? We traded long on one day, euro dollar last year, even though we were technically below 200 EMA on the 1 week. Yeah, well, I've also came a very long way over the last year in my trading. So I don't even think we had a 200 EMA at the time. But if I traded anything inside of like here, it makes sense why I traded it. It actually looks pretty okay. It looks as like an accumulation, reaccumulation, starts making the reaccumulation, and trades anywhere like almost inside of here to here is actually fine. Probably. And then it went into shit. So if I did trade around here, that makes sense actually. Look at the 6 month, even more confusing. Oh yeah, of like euro dollar. A smart man learns from his own mistakes. A wise man learns from others. Well, it's a good thing that I learned from all of you and myself. It's pretty helpful, I guess. Saw Warren Buffett sold GL early Q4 in 2023. What do you think he didn't like? The fundamentals, probably, because that's how he trades. GL early Q4 in 2023. I have no idea what that is. He probably didn't like the fundamentals. Like, that's it. Because he trades fundamentals, right? Like, there's not much else to it. I don't... Yeah, I mean... Maybe he knew something that others didn't. He studies that shit like really well. You know, he might have known at this time that they weren't going to be able to meet quotas or whatever it might have been, and then this happened. But again, if I was trading something like this, which I probably wouldn't have been, but if I was, you know, I would be out of this trade by around here anyway, right? Because if I'm trading this thing in any way, which honestly, it's really, really ugly, I would argue. But even if I'm in this somehow, for whatever reason, I don't even know how I'd be in this, but if I'm in this, let's just say through, I can't even find, like maybe through some MB in here that's forming, like through the fractal MB, let's just say that's something I got in for some reason, right? I'm in this, maybe a partial, right, on the way around here. If for some reason I'm still not out of this and I hold on to it, hold on to it, hold on to it, by this candle as it loses everything, or even this candle as it loses everything, I'm out of everything, right? That's just it. So like, again, you can predict down moves or be out of them before they ever happen. Like, it's not that hard because you're not just opening up your risk entirely. So I don't really care what Warren Buffett saw here really, because I wouldn't really trade this thing ever. Because he's not looking at charts, remember that. But again, like when his fundamentals align, it will always kind of line up with a good chart. That's what you have to remember. He said, imagine if you got that break-even rate up even higher. Yeah, if you got that break-even rate up higher, that'd be insane on the system. And like I want to take a second just to look at my personal kind of data collection, right? Like I've been doing very well for myself this year too. And you can see like even in my mind, this is wild. Like my loss rate is disgustingly low. I expect this. Again, I expect it to go up. I cannot believe that it's under 20%. That is so crazy to me. My break even is almost 50% of trades are break even, which is a really, really crazy thing. In my opinion, it's a crazy thing. Now, I expect to go up, but I also know my system is very, very good at taking break even. So I actually can jump into and look at that in a second with you guys about what I mean by that, right? But it's been beautiful, right? And a lot of these trades are still running. So like this Google one right here is still running. This is based on what it's guaranteeing right now, but it's still running. So it could make me more still. UTHR, this trade is still running. This is what it guarantees me based on my stop loss and my current partial. But it can make me more if it keeps going, of course, right? Which is crazy. And then, you know, you look at this thing and almost all my trades are break even, right? This is a wild thing for me, but it's because as I keep doing the same thing over and over and over again, there's one thing I keep spotting. And this is actually what's going to be in the remastered course as well, the remastered section, where, you know, as MBs validate or demand validates, right? And really this becomes just a move across like some lower time frame. That's something like this, right? So let's say you enter here and boom, that's the move. Or even less. Let's say it comes down, right? Let's say you just enter like here and then makes this move, done. At that point, I'm already break even because the reality is demand is validated and price shouldn't return. And now if price wants to go, it will go, right? So this is something that you're going to learn in the mastery as well. But this is the reality of price action in terms of if it's going to make a move. And I see it over and over and over again. So I use that in my trading to literally protect my downside. And then you look at something like this, okay? So here's a trade that I was in and took last week. Okay, again, just as a quicker breakdown, screener, right, in line, very simple, very good. So happy to take a look at it. Showed some strength alongside the market, right, especially up here. It kind of held up a little bit, so I was like, okay, I'll take a look at it. Stage oneing through being bullish, coming out of a deeper like move down here. Stage one, stage two, stage one, longer term stage one. Stage two, stage one. So I'm assuming this wants to keep moving, and that's what I was looking for at the time. Weekly's all good, you know, nothing crazy here. Don't really care. As I move to my 65-minute, you know, I'm kind of looking at the structure. Okay, I'm gonna make this gray. I'll save it red. I'll save it though. Make it gray. I don't know, like it's hard on my eyes. But you know, the normal higher high, higher low base structure kind of started. You had that pause again in price reaccumulation. Exactly what I want to see. Price then takes off. Forms its first MB or FMB. Again, this is an entry potential, but I didn't take it. That's fine. Now, but here's something important. Before I even look at this, if I had taken this trade, okay, I'm going to ask you guys a few questions. Do you think I broke even on 1, 2, 3, or 4? If I took this trade right here, so that buy stop through this black line, at what point or between which points do you think my break even would have come on this move? right? So a lot of people are saying 1, a lot of people are saying 2, some people are saying 2 and 3, some people are saying 4. My break even on a trade here would have happened at the close of this candle. In this case, that's it. This is enough strength for me to be like, okay, the move's ready. And the reason for that, and you're gonna actually learn this in the mastery section, which is gonna, again, come out this week. So again, tell everyone, okay, tell everyone. It's because, you know, there's your down move. The MB gets validated, and I'm assuming this is a close, okay? So what's happening on another time frame is this. On a higher time frame, this is what's happening. Now let me ask you all, what is this in terms of the most basic understanding of price? This is called a validation of demand. This right here becomes demand validation right here. This is demand validation. And if demand is validated, what does that mean about institutions or the composite operator? They don't want their positions that they bought up to ever come back to a price at which they bought at. So the reality is they will support that price higher with very, very small exceptions of it ever coming back here to make the true move. Because the real move is there. If the real move wants to come, it's going to come. And the next candle on the higher time frame is this. So the reality is, a lot of you are correct that the break even would be either at 1 or at 2. Both are valid because, again, if we're talking about fractals, this might not be a close. The next candle could have done this. Came down here and then closed here, and that could be the close of a higher time frame. So this is what you're going to learn in the mastery as well. The current stuff that I have recorded is going to be out this week for the person that asked. This week, yes. And that's why you will actually see, sometimes the MB get mitigated. So like here, this is an MB being mitigated, but again, if you think about what happened here to form this, the close of a higher time frame could have been where? Here or here. Which means that if we drew this out again, here's your down candle, that's this candle. Then let's say the next candle moved up, moved down, and then closed up here. So the candle, let's say it closed here. There it is. What is this? That's still demand being validated. It looks like demand got mitigated, but it's actually was the creation of the higher time frame demand that wasn't there yet. That's what's happening. This is why MBs will get mitigated, but demand, true demand, look at this, will not get mitigated. This is what you're going to learn in the mastery section. Okay, I'm not going to spoil it. I won't go over it here. There's no reason for that. But you will learn. This is what I'm going to be teaching you. But based on this example here, okay, I want to show you guys this trade. I should have broken even on it. Should have here, or at the minimum, latest here or here. This is where my break even should have been. Now I was slow. And I ended up breaking even after this candle right here opened down here and then closed here. So I was fine. I still got a break even out of this. But it was a mistake on my part. The reality is this price should have just taken me out. And I should have taken a -1. Now, again, the reason I'm showing this is because, you know, we can look at my own system here, and my break even rate is wildly high. The reason for that is because in most cases, I actually would break even at one of these points. Okay, because the reality is, as demand validates, price should not want to return. That's the reality. And if it does, it's because it's just going to keep on chopping and making the move and setting up. Now let's take a look at some of my bigger winners currently. What do you notice? Right? The same thing. MBs get validated but become higher time frame demands. The real demands don't ever get mitigated. The real demands, look at this. After this candle, I was break even. Joel says, when will we get the BE rule videos for the explanation of your BE rules? Just now, but it will also be in the mastery section that I'm working on right now, that I'll start releasing fully this week. But my break even rule is simply strength or validated demand, basically, of a higher time frame, or just strength on the entry time frame. That's it. Because every move that actually ends up making me money, for the most part, even though some come back and then go, never come back. Because the reality is, if I'm with the big money, there's no reason it would ever need to come. Like, it is almost impossible for me to take a break even here. I can't do it if the move is actually going to happen. Take a look at Google. When did I break even? 1, 2, 3, or 4? 1. That's it. I bought into the MB. I assume this could be possibly a higher time frame validation demand, or maybe on the next candle. Either one. It could be 1 or 2, really. 1 or 2. And then price goes. I took a partial into price, and the rest is now sitting simply at strength, because now, if demand is true, price is going to get bought back up, and tomorrow we're going to be up here. And we're going to keep going and keep going and keep going. Otherwise, I'll be out of the move and it's all good. Do you still do the management of getting at least 1 RR from a trade? Nope. Not at all. I haven't been doing that for months now. For absolutely months. For months, I haven't done that. Right? But you can see, this is why I have such a high break-even rate. And then let me ask you a question. Do you guys think that in the event that I break even, and then price does come back and then go, that I care, given these statistics of my system, where literally, let's say 10 of these break-evens could have been wins. Imagine I could have 39 wins. That also means that 20 of those break-evens could have been losses. And this could be 33 losses. And which one do you think makes me more money over time? This protects my capital, which protects how much I can make on the next trade, basically, which protects my underlying, which gives me the ability to risk as I feel, which gives me a lower drawdown, which means I get to risk basically more per trade on average, which means that my equity curve grows. My equity curve grows. And that is how you get to these crazy moments where, your compounded balance becomes 92% gain. And everyone looks at it and goes, what the fuck? How did that happen? Right? How does he make 100% in about 5 months, 4 months? That's not realistic. Well, I followed rules, right? And those rules led to what you see here. Now, what's really cool, and this is actually something that I wanted to talk about, but I waited until just now, is that the data collection sheet, when you use something like this, it truly shows you kind of the time element. So the people that have the problem with the backtesting thing, right? Because the reality is, imagine I pulled up with you, like I pulled up to you and I said, okay, open your calendar for me right now. I asked you in front of your face, I said, listen, I need you to open your calendar. So you open your calendar, boom, here's your calendar. Let's say here's a month. Let's say what is it right now? June? It's about to be July. So it's July. Let's just break up the calendar, classic, whatever, just, a good amount of days. Yes, Christian, it's much better. It's in the hashtag, the process and resources at the bottom. So here's July. Now imagine you're a trader, okay? And this is what I told you. Hey, listen, bro, I'm gonna make you profitable. Okay, it's gonna be very simple. All you're gonna do is you're gonna buy, stop, an MB, but because I know what's gonna happen, okay, very simply, ready? Because I know what's gonna happen, you're going to simply ignore all this for me, ignore all this, and honestly take a trade here, then ignore this, just don't even show up, don't show up, and then take 2 trades here, and then don't show up for the rest of the month. That's it. Now, if I gave you a system like this, would it be easy for you to show up on those days, take the trade, and walk away for the rest, right? Because you're going to guarantee to make money. The answer is yes, of course. This is going to potentially help a lot of you with your current psychological issue, but if I told you, blurt out your calendar, come and show up on this day and this day, and you're going to be good. You would do it, you would make money, and you'd be happy. Now, the problem as we go live is that this is not how we think. Instead, we think that because we're doing an action, we should see a reward, right? That's how it works. We do an action, we want to see a reward. So all of a sudden, the days where nothing should be happening, we're actually letting things occur. We're letting things occur. We're letting things occur. And all of a sudden, we seem like we're bad traders. But again, we're trading bad context. And the reason I bring this up is because now if you look at my actual system, hey, this system makes money. Wow, great. Take a look at my calendar. From the same the same thought process that I just showed you. The reality is, if I just kind of threw a line through it, there's like 1 or 2 trades every 1 week, and some don't even do anything. That means that every day that you see as white here, if I didn't even show up, I would have the same exact process as showing up. But the problem as traders, right, is that no one's there to tell us, hey, don't show up these days, the context is good this day. No one's there to anticipate and tell us exactly how the calendar is going to go, right? No one, maybe except the screener is pretty good, but no one is going to tell us to trade or not trade. So we need to do it for ourselves, right? Which is why it's so important and paramount that you get used to not doing anything, to show up and literally analyze, to walk away, right? Because there are days where I will sit there in front of my computer looking at markets and there's nothing, and I just, okay, that's it. That's it. There's nothing more for me to do. And this goes directly in line with this right here, where if you think that your action needs to have a reward, you will take paramount losses. And if you don't understand context on top of this, then you're going to be trading even more markets randomly, which leads to even more random results that lead to even worse conditions over time, even if somewhere wins, because overall, the losses eat away at everything else you've done. So you need to be aware that if you look at an outside calendar, which is why the data collection sheet exists, you start to really see that, a month to month is truly a sit back. It literally is. A month to month is a lot of just sitting and doing nothing, with the exception of when the trade is ready for a potential move. And then we take the trade. Okay. Do you sit there all day or set alerts, go play League / work on other things? I have the alert set on the things that I want to watch. I watch them as they open. If they set up for a move, then I take the move. Otherwise, I do nothing, right? I just kind of do work, maybe play games, chill out with the family, whatever it might be, and then show up the next day and do the exact same thing over and over and over again. And all of a sudden, you have a buildup of days where nothing happens. That's it, right? But still, somehow, I'm up around 100%, well, 90%, almost 100%. I've almost doubled my money since February. Since the first trade on Bitcoin in February that I showed you guys, right? I just want that to really seep in. Now, again, this is not me telling you that you need to have these kind of results at all. Even if you made 2% since that time, you've already done more than most traders ever do, okay? And you can improve on that. But this is why that happens. I protect my downside by not trading random stupid trades. I take very few losses because I only trade the stuff that I should be trading. When I get in, I then break even when I need to. And there you go. Now, again, if my loss rate went up to 35%, 40%, do you think that would bother me? Just wondering. Yeah, you're right. I wouldn't, right? Because I would still be profitable at that rate. And I actually expected to have a higher loss rate. It just so happened that with a lot of the recent trades that I'm taking and the way that they start off, the break even just keeps happening. It doesn't matter because I'd still be profitable. So I'm just going to execute my system, right? Because I understand that over time, the system will bring profitability. And for a lot of people that, are kind of sad about their drawdowns or whatnot, you can pay attention to some of my trades here. A lot of trades were actually in drawdown. Like, even if you pay attention to this point here, this was about 10 trades of just, sideways / drawdown. Sideways / drawdown for 10 trades. Around sideways / drawdown for like 15 trades. This is pretty much mini sideways with the exception of this trade, right? If I simply got rid of this trade here, which was my big one, like this, right? The reality is, just with that one win taken out, because again, I don't know when the wins are going to come, I've been in drawdown for about 15 trades. Now, it just so happened that this did not happen, and instead it's a winner, and now I'm making money again, right? Phenomenal. But you need to recognize that, like, I'm okay with that. I'm okay with having a drawdown, and it's going to happen. I'm going to go into normal drawdowns, and sometimes it's going to be a deeper drawdown than what I've experienced. Because so far, which is wild to think about, my maximum drawdown has been about 1% over the last, 5 months, which is stupid. That is stupid high. Like, stupid low, because, it should be higher. I should have, this. I expect this to get to, a -10 at some point. -15, -20 even. This is insane in my book. I want you guys to really understand that. It's insane even for me to look at that and be like, holy shit. I just made 100% on 1% of drawdown. But that's because it just so happened that over the last few months, I haven't really taken many losses back to back. Okay, there's been other times where I've taken more losses back to back, and then of course it just that ends up being a bigger drawdown. So there you go. Two years ago it was 90%, but now with the Mentafex course it becomes less. Exactly. So bad this month. TradingView stock is plummeting. Yeah, TradingView right now, I don't know what they're doing, man. Bro just made $500,000. Right click on the order. Oh yeah, we did all that. We did all that. All that looks good. Congrats, man. 800K. There you go. $5K. Yeah, that's what I thought, because it was in yen, I think, or something. First live webinar after a year of being here, and I'm late to it. First live? Holy, welcome, dude. Kumagi did that, and he made 300 million plus. Nice. What size is your monitor? 4K, 30, no, 20. I don't know how many inches. I don't know how to check. iPhone says, hey, when I'm backtesting, I can clearly see choppy price, but when I'm live trading, I just can't. Pay attention to the things I just discussed throughout this entire webinar. That was kind of the main point of it. I know. That is why this webinar exists. Lucas says, I was unsure whether UJ extended this time last week, and I wasn't going to trade it. I had another look in line with everything we've discussed today and ended up making it last week and making 5R. Good. I bet after a while they realize price is running away from their TP all the time. Nope. Well, some people realize that and they find their way here, right? That's literally what happens. People are like, this shit just, everything that I'm doing consistently just puts me on the wrong side over and over and over again. If you can just simply join this mentorship and the one thing you get is, okay, now I'm not getting as many trades, or like I'm not even winning as many trades, but I'm always right about price now. That in itself is a huge thing. Because I don't think you guys know, but most people spend most of their lives on the wrong side of the fucking market, right? Like, again, I don't like doing this, but I'll just do it for whatever. Community, Outlook, right? FX book, whatever, right? Like, if you look at this, okay, everyone is short on UJ. 75% of people are short on UJ and have been probably for the last few months. This has been the case for like months on end. And this is the same thing for stocks. This is the same thing for NASDAQ. This is the same thing for like anything. It doesn't matter. Because because a lot of the education out there is always based on averaging down. It's based on emotion, and emotion leads us to want to expect the reversion, not expect the delivery, right? That's literally how human psychology works. Anton, can you go over again, I know, to your break-even rules and make a quick example? Sure. I took an entry through the long. I bought it basically around here as it opened up and came up. I bought it. On this candle, I closed it. I moved to break even. Or on this candle as it moved through that high, because I expect it would never return. That's it. Is a double MB on a specific time frame a reflection of the end of a stage one, or is it more so on eye test? For me, before the stage ones and twos existed, when a double MB was formed on a specific time frame, that meant bullishness. I'm confused by that question a little bit, honestly. Every good setup is going to have some kind of double MB within it. Here's UTHR in front of you. MB1, MB2, MB1, MB2, MB1, MB2, MB1, MB2 leads to delivery. I don't know exactly understand what the question was, but yes, double MBs are always going to happen in some respect for a move. Here's Google. FMB1, MB2. That's where I entered my trade. MB1, MB2. This move should go if it wants to. MB1, MB2. It starts the move. But I don't understand the question too much, so I'll just show you like based on some of the trades I'm in. MB1, MB2. My trades through the second MB, broke even, doesn't want to hold. MB1, MB2. If that's too small, MB2. Inside of it, MB1, MB2. Inside of it, MB1, MB2, etc. Fractals. It shouldn't return unless they have to come down to mitigate. Got to go until see you all. Take care. See you, bro. So much sauce, so much lag. Sorry about that. When will we get the BE rules for the explanation of your... I just explained it. Do you still do the management of... Oh, no, I don't do that. Can you make a release? Oh, you did that too? My bad. Where's the equity? These are better results than mine. Look at that. Literally. These are literally better results than mine. That's wild. Good shit. Do you just aim for first partial with momentum loss after it moves? Yeah, like structurally or through insane strength. That actually changed my perspective on break-evens and capital retention. There you go. You need to learn to show up and analyze and leave. Yep, exactly. Doing nothing is an action. Agreed. I was backtesting a pair a few nights ago that was literally in stage 1 for 21 days. I think I could not believe it. That's very short. Yeah, but that's how it works. It depends on the time frames you're looking at too. My best failed challenge took me a day to break the drawdown rule. There you go. And that's when you know you're not following the rules, right? Your average win is 5.1 R. So with more than 20% win rate and all other trades being -1s, you are still fine. Yep, exactly. That's why it's so powerful to have a system that just kind of delivers well, gets you in trends, because even when and if this loss rate goes up, you know, the EV takes care of itself. Like this break-even rate can go away completely and I'll be profitable. That's a crazy thing to remember, to understand. Like this could be a 58% or whatever it is, 60% loss rate, and I'll be profitable. Just remember that. If this whole thing was red, I would be profitable with the same system, just less profitable. That is a really crazy thing to understand about your system, because then you stop worrying about doing anything. You just follow the system, right? On average, how much of a move are you capturing? All my management styles, no matter what, I can't seem to get more than 50% of a move. How can I make more out of big runners? I rarely get the big runner. My biggest runner was probably like Bitcoin. When I traded this thing. And I took my first partial like in here. And my second partial was off of a loss because the momentum was just so great. Most of my trades don't do that. Like Nvidia, for instance, I closed the entire trade here. I took 50% off like here and closed the rest here. I missed this because I was just being done with my rules. But if you want to think about how much of the move am I catching, almost none of it. One candle of 700 candles that made like too much of a move that I could even think about. And if I got, you know, I could have probably gotten better trades, but I just started looking at it here, but whatever. So I get a very small amount of the move. If you're getting 50% of a move, that's wild. Because I don't even get 50% of a move. This is probably less than, I don't know, 1/10 of a move of the move that actually happened even here. But if you look at it even bigger, it's 1/100th of a move. The biggest realization I had is when I understood that if price wants to go, it won't come back after a double MB up. I used to always wait for a bearish MB after a double MB up. But when Anton shared his BE rule, I understood that when the move is ready, it won't come back. Nice. John has another question. In recent weeks, some students have found a lot of success by studying the context of your entries. Should we be focusing on only the most recent trades? Yep. I tried going back to mid-2023 when the asset was first used, but those contexts often look bad to me. Yep, I've improved a lot since that time, of course. So even if I get lucky, make 10K off of MB1, then continuing to trade like this long-term without a system, it will mean I will lose everything eventually. Yep, exactly. If the trade that you sent earlier worked, it wouldn't matter, because if you kept doing it, you wouldn't catch the knife every time. You wouldn't manage it correctly. You would probably get emotional in some way, but even without that, you'd still lose money, right? Because you have no system. You just have, I mean, literally, like you came and the reasoning for your buy was what? You said, they bought a 5% stake and I bought it. That is, if you go and then find every time that they acquire an X% stake in a company and you trade that, you're probably going to lose money, right? Guaranteed, especially in a down move like that. Here's my curve since June 7th. Beauty. And this is on your live, right? Because I remember me and you spoke, and I think you started getting on a live. So this is great though. Yeah, dude, like this is so beautiful. Yes, I believe so. Christian, do you track what % of trades that hit break even would have ended up working to how many would have stopped out? No, I just want to protect more of my capital. I don't care if 3 break evens could have been 30 RR runners. I just don't care. I want to protect my capital, right? That's all I care about. And if I can protect my capital at a much higher level and still make money, perfect. I'm gonna do that because there's nothing else I need. Hey Anton, I just want to say I'm so happy about what you mentioned in the beginning. I see a lot of people trade with like a 1 hour max time frame and having good results, but I could never make it work for myself. I do tend to have really good results if my context lines up all the way from daily to 1 minute. Me hearing this from you really boosts my confidence a bit. Good, beautiful. How are we looking here? Just about coming on the 2 hour mark. So I actually probably am gonna wrap this up with the team right now, and then focus on getting the thing out to everyone. Zesh says, what FX pairs are you gonna watch this week? What do you think? XXX JPY pairs, pretty much. That's it. Everything else is in complete shit mode. Anyone trading the other stuff is probably losing money. I haven't looked at a lot of FX pairs recently, with the exception of UJ, and I missed the UJ trade. And now UJ is quite pushed up. On lower time frames, you're still good, right? This is easy market to trade on a lower time frame. Like all of this was good lower time frame stuff. But I'm a little bit late. So yeah. You know, there were good trades in here. Started building something. Could have maybe taken some trades in here. Lower time from these were great. And then now lower time from again, you might get some moves out of here. Yeah, Melly, renew it, buddy. What are you doing? Are releasing it as a full package or in parts? In parts, because the full package isn't complete. But the whole part that I just said I would release, I'm going to release fully. Like, I'm going to release everything as I have it in full. Like, I'm not going to just like wait on the release. I'm just going to release them all if I have them. So that's the goal this week, because I have to go process all the videos because they're the way they're recorded, right? So even if I get lucky, oh yeah, we went over that. Been following you since 2021 on YouTube. Joined in 2023 and I'm still here. First live webinar and it's still sauce. I appreciate you, Eddie. Thank you, man. Matt, can you give me a little outlook on NQ and gold? Sure, we'll do a quick one. So gold looks like it's probably still in a chop before I even look at it, but we'll go take a swing, see what's up. So yeah, as predicted, you know, if we lost this low, we'd probably go back in the chop or keep going down as per this. So this is like a very easy kind of walk away from market at the moment. You know, you can start to look at it on lower time frames if it starts to kind of come up above this to start maybe a stage 2. And then up inside of these areas here, you might get something, but right now there's nothing at all. I would not touch it beyond this. I would not even go lower. Very, very easy for me there. You know, 65 minutes, starting to build up something. You can see I started watching it here again, just failed back down. Starting to build something up again. You know, if you're trading like one of those lower timeframes and you don't want to wait for clear bullishness, you might be able to get something like this start of the week. It could happen, but it's a hard one. I wouldn't trade it, so I'm going to just wait. Did you look at oil already? Yeah, I don't like oil right now. I think it's going to go for a flush. So gold is a no-go. Now NASDAQ, on the other hand, is, well, there's actually a little bit of red coming in, but it's been green for a long time and has had good context, so we're going to remember that. Go over to NQ. Yeah, so I mean, it started coming out of this, and I wanted it to start, actually, I'll just look at QQQ here, right? Because same thing. It started coming out of there, and I wanted to start seeing it deliver long, right? So this is why I'm still in a few stocks and stuff. Because it's still clear for longs. But you can see what happened is, you know, the move started, and unlike JPN, which continued its move and kind of wants to continue, NASDAQ failed back down. So it actually kind of traded below here and started a potential stage 2 down. So the reality is right now, the move, almost expectancy-wise, wants to go down, which is weird because, you know, that's not what I want to see. But instead, if we can maybe pause around here, build up some like little MB or whatever and start coming out of that, you should see continuation on this. And then, you know, up inside of those areas, should get a nice move that might want to continue. So this is why I'll still keep an eye on stocks, because right now, underlying is still bullish and has the reasoning to become accumulation. I don't see it as failing too heavily just yet. US 30, same thing. Same thing as NAS. Just apply the same characteristics, okay? Looks like shit. Right? Yeah, I mean, same characteristics, but just a little bit shittier. JUR 30. Looks like a lot of bearishness is coming in. It'd probably be an ignored just based on this, because I know it's been bullish before. So let's take a look. I mean, yeah, it's not terrible actually. You know, weekly's having its little pause. It definitely needs to start pushing up out of this. It's just stuck right now. This is, you know, this needs to come up above this, start making a move, and then around here, maybe consider it. Nothing really to do. Bitcoin is the easiest walk away we've ever seen, doing exactly as we discussed. Said it would keep going down because there's no reason for it to do anything else. This is the equivalent of you know, like there's nothing to do right now. You might get a little move up, but then we're on this trajectory right now. Minimum is probably like 55K minimum on this thing. Because right now, no bullishness has come in. There's no reason to force anything on this thing. It's just bearish. The trajectory is lower. So I'm expecting lower. Nothing here yet. How essential do you find the 20 MA for your trading? For 1050, 200. If it's on here, I use it. Right? Same rule as last week and the week before. If I use it, it's because it helps me with some form of looking at analyzing, at understanding where we are in a stage. So if you see me using it, it's because I find that essential to myself, right? HK50. Is that even in here? No. Maybe. Who knows? Hong? No. Need to maybe add that. On the downside, has nothing to do right now. Right? Bearish but bullish here, so that's really weird. Bearish but bullish, bearish but bullish. Bullish reaccumulation but bearish. That's really weird. Yeah, it's called the I do not want to look at this at all. This is something I would not watch. It has way too much back and forth. Doesn't know what it wants to do. Not moving higher, not proving to go higher. Getting pushed lower. Right, ever since basically this extension, basically this pop back down. Now it's literally sailing itself lower. It wants to stage 1, stage 2, stage 1, stage 2. This thing's going to be at 17K before you know it. Maybe it even drops off heavier and goes down to 16.1. 17K is the next plan on this thing, but I wouldn't touch it because again, you have indecision across multiple timeframes. Non-synchronization means demand and supply are not coming in a clear way, which means institutions are not accumulating or distributing in any given way. So you're just throwing a dart hoping that you get the direction right, which is a hard thing to do. And you have indecision across multiple models across timeframes. So I would not look at HK52. Remember, most markets are markets not worth watching, and if they are, then they need to set up. Oftentimes what it comes down to, okay? All right, everyone. It has been a pleasure. I'm going to wrap this up right now. Stop the recording first.